Hello, I'm Michael Glass from michaelglass.com, where we focus on making informed decisions about our financial future. Before we begin our video, you want to start off with our disclosures. Any symbols you see today should not be inferred as a trading recommendation. No matter what form of investing you choose, stock, forex, futures, options, they all have a level of risk associated with them. Any strategies we show today are for informational purposes only. Future results are not guaranteed. And finally, any investment decision you make is solely your own responsibility. Trade at your own risk. So this is our stock market technical analysis trading plan. In our video, we'll look at the past week's economic calendar and also look forward to next week. We'll see what happened as far as the most recent price action to identify key support and resistance price levels. We're going to look at the charts of the market leaders, Apple, Google, Goldman Sachs, Priceline. We'll take a look at those. We'll look at the dollar, gold, and crude oil charts to see if there's any leading sentiment. And finally, we'll have an education spotlight at the end. As we look at the week that was in the stock market, we can see that the market ended split. The Dow fell, however, the Nasdaq rose and the S&P fell slightly. So basically, the market was split for the week, and we have to remember this was a holiday shortened week with the 4th of July here in the States. Overseas, we had some of the major economies cutting their interest rate. China cut their basis, and the ECB also cut its basis. Corporate news, there really wasn't that much going on this week. The big news of the week was the disappointing jobs numbers here in the States, 80,000 versus 100,000 jobs created here in the month of June. And the second quarter, we saw the average job creation, private sector jobs that is, at around 75,000. Now keep in mind, the first quarter, we saw the average job creation in the private sector at around 200 to 50,000. So that is a significant drop off. Unemployment rate remained at 8.2%. Will there be jobs hired in the rest of the summer or going into the fall here? Who knows? But certainly it was a disappointing jobs number. Going into next week, we do have the new round of earnings seasons beginning right here on Monday after the close. We have Alcoa, and then on Friday we have J.P. Morgan, a major bank. As far as economic data, we don't really have much going on. We do have consumer sentiment here on Friday, but I think the earnings could be something that can kick off some momentum, but we'll have to see. Let's pull up the charts and take a look. We are going to start off by looking at our sentiment leaders of the dollar, gold, and crude oil. And the first thing we'll see is our dollar here trying to make or reach our past high here in June. So we've broken out here again. We did get our double bottom and a really nice strong week for the dollar. And of course that's interesting because again, weak jobs number, strong dollar. And you would think you wouldn't see that because the weak job numbers may finally motivate the Fed to quantitative ease, which is print money, which weakens the dollar. So it's interesting to see the dollar have a strong week off of that, leading into that news. So again, here we are looking at retesting this past high. What I want to do is go ahead and zoom out one more time. Actually, instead of zooming out, what we'll do is we'll go into our weekly, see if you see anything there. Well, look at that. The 500 moving average is coming in here. And this past swing high here from last month matches up with this little swing high going right in here. So I will go ahead and we'll use that as a price level, even though it's not a lot of distance from our last, what is now support, which was once resistance. And then we'll go back to our daily and say, again, that's what we're watching. So 83.67 is our next target. After that, we're really going to have to start looking at probably 84. 84 looks like the next way to go after that. We'll go out to the monthly just to see. Monthly, we got to go all the way up to 86. So monthly is probably not a good gauge for that. We're probably going to have to go back to that weekly. All that being said, the dollar strong. What about gold? Well, gold is going to look very much like the S&P 500 chart from the standpoint of we have this downtrend line that we're watching. And once again, right in here, it's panning out. Fell off here. Sort of a wedge potentially going on here. A range, 1540-ish, 1530-ish, up to 1600, even 1640-ish. We also said, look at these wicks. This is what we said last week. All this consolidation in there is where we're failing once again. So again, very range-bound market the past couple months. We'll see what we'll get from there. But gold sideways. Finishing off with crude oil, which rallied a little bit. I drove up to Virginia this week and saw gas under $3. That was nice. And we fell off here at the end of the week, but now we're looking at a range of $90 to $80 for the past couple months. Crude oil definitely sideways. So here we are looking at the daily chart of the S&P 500, and one thing to notice is our downtrend line here from April. We had a swing high here in May. Didn't quite make it in June, but right here in June, you can see we didn't match up. So this right now is panning out to be a good downtrend line to watch. And of course, you can see Friday's down move in reaction to the jobs number. What we're seeing, though, on our daily is that our indicators just fractionally on stochastics got overbought. Didn't quite reach overbought on RSI. MACD starting to roll over a little bit. And of course, that kind of works out with our downtrend line. But what we're seeing, though, is a wedge. We've got our downtrend line, and then we have our uptrend line that we're watching. So we're certainly going to need to get some type of breakout. And then longer term, you can see this resistance of 1367, support of around 1300, 1295. Longer term, for the past 2 months, we've been in that range, 1300 up to about 1370, rounding it off. So that's going to be something also that we have to see the market want to break out of. So even if we break out of that wedge that I was describing, we need to break out of that range, which might be a little bit easier to see on our weekly. So we'll zoom out a little bit. And we can see very nice uptrend here on our weekly, but we're putting a sort of a doji here. And again, you can see that wedge that we're talking about. And our indicators have more room to go to the upside, but they started to level off here this week. One more zoom out to our monthly. So daily, a little bit overbought, coming out of overbought. Weekly, more room to go to the upside. What about our monthly? Zoom in for us. Zoom in for us, and we can see that big May candle down. June, we recovered a little bit. July, first week, not so good. Our indicators are coming out of overbought. So our monthly indicators and our daily indicators are pretty much the same, coming out of overbought range. Switching over to the NASDAQ. Now this is going to be interesting because remember the NASDAQ was not down this week. The NASDAQ was ever so slightly up. So we'll switch on over, zoom into just 2012. And one thing we'll see consistent is we can see a range. 3,000 is the top of our range for the past several months. And 2750-ish, 2740-ish is the bottom of our range for the past couple months. We did peak up ever so slightly. But again, Friday's price action did bring us down. When we look at our indicators, we can see MACD's heading up still. RSI hook over. Stochastics trying to hook over, so kind of blush, showing that we are at the top of a range. Going out to the weekly, zooming in, we kind of see an inverted hammer here on the weekly. Nice uptrend, but an inverted hammer at the top of our range. Indicators are kind of in the middle of nowhere. And finally, going to our monthly. This is probably where we'll see the biggest difference because we did, even though it's just the first couple weeks here in June, we do see, we see the inverted hammer here also, but we can see coming out of overbought pretty much on our indicators here. So similar daily, monthly, agreeing, coming out of overbought, so we have to watch for some type of pullback. But again, our catalyst this week, our catalyst for the month of July, will be our new round of earnings reports. Okay, as we look at some of our market leaders, one thing that's interesting, we've been talking about the new round of earnings season. So will we see a little earnings run? We know that the NASDAQ is the strongest this week. So starting off with Apple, we can see that Apple actually had not so bad of a week, running up to 620, air kissing it, I guess, if you want to say. Certainly have broken out of its range. I'm going to say it's sideways to up on Apple. Hasn't quite reached tested the high here, 644. Needs to get above 620. But overall, Apple looks really good. You can see our point of control is all the way down here at 572. Once we got above 587, we really broke up here. And so what to watch, 601-ish. If we get below 601-ish, we could fall right on back down as far as our volume profile is showing us. So Apple sideways to up. But Amazon, whoops, can I type? Amazon, which was left for dead, but ever since this earnings, really been able to hold up, found support at the 50 moving average. Zoom in for you. There's our support at 50 moving average, and it's finding some life here. Needs to get above 230 to really start retesting some of its highs. A lot of volume. As you saw with Apple really glided up, not a lot of volume. You can see there's a whole ton of volume here at all the price levels for the most part here for Amazon. So, there's not really much to say. Point of control is at 224. That is where we bounced. Amazon going to stay sideways up. So Apple definitely up, sideways up. Amazon sideways up also. What about Facebook? Trying to survive, keeping it on the daily, and you can see found support 131 in a range between 31 and 33. Point of control is just above 31 to 31.50-ish. Needs to get below 31.75-ish to fall back down below again into our range here. But overall, Facebook is sideways. Google's been mixed, not as strong as Apple. Fell down to support about 560, came up, found resistance at 600, also the 200 moving average. I'm going to say sideways. A lot of volume. You see here, a lot of volume in between 580 and 560. A lot of volume here to act as support. I'm going to say sideways for Google. You could say sideways to down because there's definitely been some lower highs. Goldman Sachs has been down, definitely in the range. A double bottom give us a little bit, but when we broke above our top here, we ran into resistance of the 50, and we got resistance at 100. Sideways to down for Goldman Sachs. Again, we'll see what the earnings tell us. What about IBM? IBM has not been the stellar. Looks very much like the market. You can see we have an uptrend line here of the 200 moving average. We've got our downtrend line that we're watching here. So there's that wedge in between 190 and 200 here for the past couple months. We really need to get above 200 to start testing some of the highs. I'm going to say sideways on IBM. You could argue sideways to down, point of control at 194. And need to get above 196 to get up there into this next volume around 200, 199. Intel, which typically follows IBM, of course, at a lower price range. Uptrend line of the 200 moving average. There's our downtrend line. Staying above 25, ranging to around 27.50-ish. Needs to get above 27 to go test that. If we can get about 27.50-ish, we can start testing its previous highs. Sideways on Intel. What's next? MasterCard. MasterCard, also one of our bellwethers that had some weakness, but you can see, like Apple, starting to get up there a little bit. Certainly can go in there, draw one of our price level lines, and with all these wicks in here, these wicks. So I'm going to draw something in there. Whoops, come on. There we go. And so we are just above that right now. So, try to get up, sideways up, kind of like Apple, starting to accumulate a little volume here on the Friday. So volume's going to be tough to get above that, so that we can retest the highs. Sideways up. Netflix, I know I told you guys, post some stocks on the video so we can know what you guys want to replace Netflix for. So I'm still waiting to see what you guys want to see. Coming into the 200-moving average as resistance. Also, we have resistance here at 92. Found a little life here. We'll see if earnings can do that. But notice on our market profile, we get below 80, and we're going to fall right on back down here to 68. Not a lot of volume to hold us up in this middle of that range. So sideways. I'm not going to say sideways up on Netflix. And finishing off with Priceline. Zoom on in for us. Priceline, not as strong as Apple and MasterCard there, but you could say sideways up, sideways, still back into its range. Price point of control at 671. You can see all the volume in here. So look again at the chart. Priceline sideways. As we come to our education spotlight, we've been talking about a plan and knowing why you're trading. And, the main thing is, again, becoming a rules-based trader, becoming someone who's trading with a purpose and not trading just to trade, is you have to know where you want to get into a trade, where's your target to get out of the trade, and where's your point where the trade didn't work. An entry, a target, a stop loss. If you don't have that, you don't have a plan. You have a trade. There's a difference between trading with a purpose, there's a difference between trading with a plan, and trading just to trade. Where are you getting in? An objective entry, not just and you can have an objective entry entering with a market order, but you specifically need to know what your risk to reward ratio is, and that's knowing where your target is and where your loss is. So many traders that I've worked with in my mentoring program have no idea where their target is, and certainly no idea where their stops are. So many people focus on the entry and chart patterns and technical indicators and signals to trigger an entry, but then where are you going to get out of the trade? Both to the positive and to the negative. You've got to have a plan, a purpose for trading. As always, we want to thank you for watching and want you to comment, like, and subscribe our channel so that we can know what you like and give us feedback on what you want to see. I am happy to announce that we do have our new Forex Signal service for you that you can sign up for. Of course, we have our mentoring program, as I mentioned, working with you one-on-one, coming up with that individualized trading plans, helping you develop that trader's mindset to have a plan, to have a purpose for trading. And as I said, I'm excited to finally, people have been asking us for years to put together our own service. And so this week we have unveiled our new Forex newsletter, high probability trading setup, specific entries, targets, and stops. All you have to do is go to michaelglass.com at forexsignals.html and you'll get that. As we said, it's not about the signal, it's not about the newsroom, it's not about the trading unit you're in. It's about your ability to pull the trigger on every trade. And the only way you can do that is you have the discernment. You have the trader's mindset to know what you're getting is good for you, who you are as a trader. Thanks, guys, and I'll see you next time.